Welcome to the Alternatives Mason podcast. With host Brittany Mason, Chief of Staff at Banrion Capital Management, you'll learn how to build alternatives knowledge brick by brick. Banrion Capital Management uses technology to help independent advisors scale and educate themselves on alternative investments. And since education is such a big piece of what we do, we are excited to kick off the series to dive into the nits and grits of the alternative space.
Hey everyone, it is Brittany Mason, and we are back here on the green couch for the Alternative Mason Building Alts Knowledge Brick by Brick. We are on episode 4, and we have a very special guest today, Vance Barse. He is the wealth strategist and founder of Your Dedicated Fiduciary. Vance began his career in the financial service industry at Altegris Investments, where he served as an investment consultant to the leading private wealth and retail financial advisors throughout the U.S. He saw firsthand that many advisors are constrained in their approach to planning and often leaving clients underserved. After nearly a decade in this role, Vance became a financial planner and founded Your Dedicated Fiduciary with a simple mission: to be authentic, transparent, and to have a positive impact on the lives of his clients. Vance is dedicated to his clients, putting their best interests first, and views the client-advisor relationship as a long-term trusting partnership. So let's see, Vance, you also hold a bachelor's degree in neurobiology and neurophysiology from the University of Maryland, where you served as a Howard Hughes Medical Institute and fellow studying the onset and progression of Alzheimer's disease. Wow, what a background, Vance. I'm really excited to have you here. We met back in May at the Jolt conference, and I just have to say your energy, your enthusiasm for what you do in the industry, it's really contagious. And so I'm really excited to have you on the show. I've been really looking forward to it. So thank you so much for taking the time to join us today.
Well, Brittany, thank you very much for having me. It is truly a pleasure to be here on the show. And what an intro. Thank you. Hey, Mom, come over here and listen to this. You'll be proud. My mom's not actually here. It's a joke, but that was wonderful. Thank you very much.
No, thank you. Thank you. I know you're a very busy man, so we really appreciate you taking the time to, chat with me and, dive into the world of alternatives. So I really want to first understand what your journey has been into the industry. I mean, you had such a different background that you came from, neurobiology. I mean, how did you make the switch over to the finance industry?
Wow, that's a loaded question because it's a little bit of luck and a lot of hard work. So back in 2003, I had graduated college with an undergrad in neurobiology and neurophysiology. I'm a total nerd, loved organic chemistry, still have all the books, still read them. And I moved to San Diego because at the time I wanted to go to med school with the backup idea of getting into biotech. There are 3 different hubs for the aforementioned. The first is Boston. It's very cold. The second is the Bay Area, and it's pretty great. And the third is sunny San Diego. So I don't know, Brittany, where would you want to spend time of those, right? And no offense to the Bay or Boston. But in any event, I moved to San Diego and took a temporary job running a behavioral healthcare company. And what was interesting is I remember I went to this social function at one of the, hip, cool spots in town. And I noticed something, which was several very nice cars drive up to the valet. And these guys all had the big Breitling watches, and they got out and they walked into this restaurant. And I walked up to them because I've never met a stranger. I went, "Hey, what do you guys do for a living?" They said, "We're loan originators." I'm like, "You mean mortgage brokers?" Yeah, mortgage brokers. "Don't you own a home?" No, I'm 27 years old. I rent, I'm early in my career and I think I want to go to med school. And their response was, "You dummy, you can put basically nothing down and get into a home, save yourself money because your mortgage payment will be less than what you're paying for rent. And, when it resets to the current rate in 3, 5, or 7 years, you'll be making more money then. No problem." I went, "Gee, well, what happens if I'm not?" And they said, "No problem. You can just turn around and sell it." And a light bulb went off in my head. And I went, "How many of these are you guys doing?" This is all we've been doing since basically 2003, 2004. And when this conversation happened, I might add, it was 2007. So I'd been in San Diego for 4 years at that point in time.
Okay, I was about to ask year was that? What year are we talking about exactly?
Sorry. So that was 2007. And my then boss introduced me to a guy named John Sunt, who founded Altegris Investments. And at the time, I had read a lot of IBD and the Wall Street Journal and Barron's and so forth. And he said, hey, I think you should talk with this guy, John. That introduction led to a complete career change. And little did I realize that the Great Recession was about to start. And everyone watching this knows the rest of that story.
Yes, that is for sure. So wait, did you become an MLO, a mortgage loan officer then for a bit? Is that
I think I was the only one in San Diego who wasn't in the mortgage industry in 2007.
Sorry, I'm sorry. Just I got a little confused. I thought that you were okay. That's really interesting. Yeah, my background actually in finance. I started as a banker doing mortgages. And man, I had just missed the refi boom. So by the time I finished my testing, so boy, did I get my, butt kicked with those interest rates when everything changed. So, but it was a really great introduction to finance and getting a start. So yeah, that's really fascinating. I'm really curious to know how your, neurobiology may have helped you. In studying human behavior. Has that helped you at all in this, in finance?
Oh, very much so. Yes. Newsflash breaking this just in. Critical thinking is not yet illegal. It seems to be completely remiss in today's society. But one of the main takeaways from not only my undergrad studies, which are just measly undergrad studies, but they're pretty technical when you're looking at biochemistry and organic chemistry and so forth, but also the time I spent as an HHMI fellow studying the onset and progression of Alzheimer's was to really question reality and to question hypotheses and to look at the data to determine a number of different potential outcomes. And so it's not that what I learned vis-a-vis studying is something that I use on a daily basis, but it's the process. It is the understanding of different outcomes, looking at data sets, and for example, zoom out, look at monetary policy and fiscal policy and the implications of zero interest rate policy and QE and all of the above. You really start to look through the prism of understanding things scientifically. And sometimes that's good. And sometimes that means that we really need to be awake at the wheel.
Yeah. Yes, absolutely. I'm always curious, just again, back on your journey into this world. I'm always curious, like the foundation of, finance in our first, our formative years as children, how we're introduced to, money. And I'm always curious to know what that's like for the people that I have on the show, because our relationship to money is so important. And, studying human behavior, it's so important, and it really dictates the direction of our lives in so many ways. And my own journey, I did not have a healthy relationship to money, and I didn't learn those things, in my formative years. And so my journey into this industry and learning all of this has been quite an interesting one. But I like to find out and dig deep with with the people we bring on the show to understand, what was your initial, what was your relationship with money prior, as a kid? What did your parents instill in you? I know you're a father too, so I'm curious to know what are you passing along as well to your children?
So despite working in the private wealth space and, prior to becoming a financial advisor, spending almost a decade in the hedge fund space, I do not come from a family of money. In fact, when I think of my relationship with money as a child, and this is such a brilliant question, Brittany, I really think back to the emotional challenges that I used to see over money. You think about the number of marriages that end and what the primary cause of that is, and it so often are, the largest driver are fights over money, right? Fiat currency. It's just so bizarre. What's also interesting is that we live in a country that doesn't teach financial literacy. Think about that for a second. Let that sink in. So we teach history, we teach science, we teach math, we teach TikTok, we teach Instagram, right? But we don't send these young minds off into society with any foundational knowledge idiosyncratic to financial literacy. That bothers me. It's very concerning because unless a young mind is being provided with foundational understanding of things like time value of money and investing for the future, et cetera, or even just balancing a checkbook, right? Which probably 90% of viewers just went, checkbook, what's a checkbook, right?
It's a check.
It's very important to have these core understandings on how to make smart money decisions. And that's something that I remember as a child growing up with this fear of financial insecurity and thinking to myself, if I only make enough money to provide financial security for myself and my family, then life will be great. And in the solipsism of youth, that is an easy conclusion that one can make. However, that's not reality. And some of the happiest people that I know have almost no assets, and some of the most miserable people, that I know, have the most assets. None are clients, I might add. But that notwithstanding, now that I'm a dad of my 6-year-old son and my 4-year-old daughter, both of whom have become my raison d'etre, and some of these videos are out there publicly, to teach them about financial literacy. I will ask them, what do we do with our money? And they go, invest for our future. And I go, what do you want to buy? Stocks and real estate. Yeah. That's not investment advice, compliance people, but it's an opportunity as parents, right? And we in the industry really need to do this, not only in our own families, but also for the public, to educate on how to make smart money decisions. And it's not to sound virtuous, it's just something that I think is a natural fit because financial advisors have the knowledge in their minds, and we often think about it in terms of advising clients, but we really need to start in our own homes.
100%. Everything you just said. Exactly. I didn't find that, I wasn't being taught that in schools. I didn't have that at home. And so I relate to you on so many levels with that. And so as an adult, it definitely, I look back through my 20s and I see, some of the challenges and the obstacles that I faced that really, had I had the financial literacy, I would have been able to avoid so much of that. And so we feel at Banrion Capital that it is so important to spread education. And I think that's really fantastic what you're doing with your kids. And that's really what this platform is all about, breaking down those barriers and helping to educate people, more about in the financial industry and alt specifically. So authenticity, I've heard you talk about this a lot. So why is authenticity so important to you? What is it about, why are you so keen on that part?
Because having spent thousands of hours inside of wealth management firms, I think the industry really lacks the ability for financial advisors to open up as to who they are. What kind of music do you like? What is your belief system? What are your core values? You love fly fishing? Great. Put it out there on LinkedIn. Do you love classic rock? Excellent. Go out and tweet about it. Because ultimately, while we're in the business of making people feel confident about the dollar sign related decisions they make, it's all founded on being human. And so much of the time, that's the one thing that the wealth management industry lacks, which is the ability for the practitioners to be fully open and authentic.
And build that trust with your clients. Do you have any specific strategies that you're willing to share on how you do build that trust with clients?
Very much. So in the onboarding process, when I either meet with clients or they'll send me all of their electronic documents, and I have to see all aspects of an estate, tax returns, estate planning documents, of course, investment accounts, all risk management policies. And if the client has one, either a household or a business balance sheet. And so we sit down and I'm like, okay, it's our first meeting. This is excellent. What do you want to talk about today? And typically the individual or couple go, well, you have all of our documents. What have you found? And I literally or metaphorically push them all to the side. And I go, I want to talk about what is most important to you about money. It's interesting, Brittany, that you ask about the behavioral aspect of things, because from the outside, it appears that my firm is a financial planning and investment management firm, and it is. But the majority of the time that I spend with our now 63 households is around the relationship with money and how to live an impactful life of intention, and ultimately trying to preserve capital so that it can be transferred tax efficiently to the next generation, or possibly, depending on the overall profile, the grandchildren, which is generation 3. And so much of those conversations are around what are the family dynamics, what are the family politics, and that's where the authenticity of a family comes into play. It's not uncommon for families to have 2, 3, or 4 children. One is the model citizen, 2 are kind of just living their lives, and 1 might have a drug and alcohol problem. It happens all the time. So how do we leverage different tax and estate planning strategies to accomplish certain goals that the matriarch and or patriarch have with respect to their estate, and then make sure that those goals are manifested? So something that is at our core. And I found that by asking a very simple question, which is turning to the spouse that speaks the least, because I want to give that person a voice, and overwhelmingly, it is almost always the wife. I go, what is most important about money to you? And typically I get a superficial answer. Well, I want to have plenty of it. Okay, well, let's explore that. And so there's this sort of ladder of questions that's built where ultimately I understand what is most important to that person. And around that fundamental point of importance, we can build the overall strategy.
I love that. That's great. I mean, it's so important to feel comfortable, with the person managing your money, so to build that relationship, you're helping these people navigate, through some of the most important and critical, biggest moments of their lives. So.
Well, and that's one of the big problems that I would see in my former career of consulting advisors. How does a typical person find a financial advisor? They turn to someone that they know, love, or trust, and they go, hey, I'm looking for somebody that can help me with my finances. Yeah. That person to whom they turn is not an expert in financial services. And so typically they go, oh, well, my guy down the street at whatever, firm, he's great. Our kids go to school together. We go to church on Sundays. He's fantastic. They have no idea that the portfolio might be loaded in very expensive, tax inefficient mutual funds, for example. They might not be aware of the major planning gaps that they have in their estate. And for some folks out there, they're eligible for some pretty sophisticated, very intriguing estate planning strategies that practitioners simply aren't required to know. And so it's really important to understand the right questions to ask so that you can pair the technical expertise with the trust factor.
Absolutely. Well, what drives you, Vance? What makes you get up out of bed out of the morning? What is your why? What is your why?
I have 2 young kids that have to go to college someday. Except that's really the answer, right? And I know that they'll see this someday, and I'm mostly kidding. I was born with boundless energy. I have never met a stranger. I love humanity. I'm naturally inquisitive, and whether it's a billionaire in a Bentley or a bozo on the bus, I just talk with people. There's a very well-known on social media financial advisor who has shared that he is very much an introvert. And it was funny because we got together and he has grown his practice over the years through search engine optimization and having Google direct people to him versus what I've done, which is just talk to strangers. We have 7 clients that are people I've met on planes. And it was funny because it reminded me of that classic painting where there's a sailor out at sea dreaming of being on land, and it pans over and there's the guy on land who's dreaming of being at sea. It's like we both have gotten to the same place in building our firms, but we're just different people. And that's the beauty of this business, is we can build it however we want. But what drives me is just the goal to really live an enriched life of fulfillment, which sounds, fancy to say, but this is it, Brittany. We're all front stage and center in our lives. And I don't know about, what's next in the other side, as they say, or on the other side, but I'm in no rush to find out.
I love that. I love that. Very well said. Well, let's dive into alts. So how would you define alternatives, and what is so great about them?
Alternative investments are globally diversified investments that historically have provided near zero correlation and helped hedge downside risk. Period. End. It's so funny because in my prior career, and I tell this to clients and potential clients, my job was to travel around a certain part of the country to consult typically leading RIAs, independent advisors, and registered investment advisors and so forth, very specifically on how to use institutional alternative investments for their high net worth and ultra high net worth clients. And it's so interesting because advisors understand stocks, they understand bonds, they understand mutual funds. And in that alt space, very commonly I would hear, oh, I tried alts and it never works. They just never work. I'm like, what I think that really means is it's like a seatbelt. They put the seatbelt on and they're anticipating some type of event. It doesn't happen. And these advisors will myopically look at the performance of the alternative investments relative to, say, the S&P 500, and it doesn't work, which really means that they're looking at the return stream, and the return might not be consistent with the S&P. But that's not why we use alternative investments. We use them for all types of different reasons, and there is a myriad list of different alternative investment types: long short equity, private credit, managed futures. So we really have to understand what we're trying to achieve in a portfolio, and then determine from that menu of alternative investments which strategy or strategies, as the case may be, we should incorporate.
What do you feel is the most important, or maybe the most frequent reasons that you would use alts?
One is to diversify, because if we look at a conventional stock and bond portfolio, let's pick on 2022. The performance of the 60-40 portfolio last year in calendar year 2022 was actually worse than in 2008. Don't believe me? Google it. People don't think of it that way because they think of 2008 and the performance there. But look at what happened to bonds last year. And so when we look at alternative investments as a diversifier, whether we take from the stock portion of a portfolio or the bond portion of a portfolio, largely depends on the client and the thematic view that we have with respect to those asset classes in a portfolio. But of utmost importance, would be to diversify alongside of stocks and bonds.
So the biggest disconnect you feel for advisors is they're focused too much on the result, is what you're saying? Or on the...
Yeah, because
Yeah.
Yes, because they look at the return of the alternative investment or alternative investments in which they are invested from the time they start until the day at which they're looking at it, and they go, well, wait a minute, the stock market might be on a big tear, interest rates might have gone down, so my bonds are making money, and the alts have served as a detractor. Versus alternative investment allocators back in the nadir of 2008 were remarkably happy, generally speaking, because compliance is watching this, generally speaking, with their alternative investment allocation, because many of those alts, not all, but many did this or this when equities tanked. No guarantee of future returns, of course, and insert all of the required disclaimers here. But it's important to understand the different types of alternative investment strategies relative to what we're trying to accomplish. So, for example, many advisors would say, I want to help hedge against downside risk should the stock market sell off. Well, immediately we look at what are called crisis alpha strategies that come to mind, one of which being managed futures. Managed futures can be kind of technical to explain to clients, and a lot of advisors find that to be a challenge. But if there is no event where stocks drop precipitously for a prolonged amount of time, then that particular strategy might not have enough time to prove to the advisor that historically it has been able to hedge out downside risk. So it's really important when working in alternative investments to think of it like parenting. We have to really manage our expectations.
Well, alts have been around for a while too. So I mean, how do you feel we can, bridge that gap and get more advisors on board and utilizing them?
Interestingly, the level of assets that I would raise in my former career asymmetrically shot up after equity markets would sell off. Go back and look at the dot-com, go back and look at the Great Recession, look at the pigs trade, look at the flash crash. It's almost like the collective body of financial advisors want to put the seatbelt on after the crash. Now, naturally, it really depends on the advisor and the type of client and what's in the best interest of those clients. If we have young clients that are high income earning and they have a 20-year investment horizon, maybe alts aren't fundamentally of interest. But if we have a typical retiree who wants to participate in some of the upside, well, some of the potential upside, again, because compliance is watching this, in the equity market, but also hedge out some of the downside, then alternative investments might be intriguing. So to generate interest, we really have to focus on the impact of the solution versus how they work. Because so much of the time, and again, I spent thousands of hours inside of financial advisors' offices explaining how to allocate to alternative investments. And so many of them want to open up the hood and understand how the engine works versus focusing on really what the client is interested in, which is why we have this particular vehicle in the garage in the first place.
I want to ask a little bit more about your dedicated fiduciary. So could you give me, give me your most exciting moment of starting your business, and then give me your most challenging aspect of starting your business?
The two are very closely related. So the most exciting, and I know that this is hard to imagine based on how I look on camera right now, but the most exciting moment was when I had a great big beard and really long hair. I was on a Harley. I know there are no pictures of that Vance on the internet anymore, but for those that are interested in seeing them, and Brittany, we run into each other at different industry conferences, I'm very open to sharing those pictures from my cell phone. In any event,
hold you to that. I'm going to hold you to that.
Fine, no, it's fine. Folks in the industry know about it. So I had my prior career of consulting advisors and raising capital for, these are large institutional alternative investment managers, Winton, KKR, Brevin Howard, Citadel, and there's several others. My grandmother had a massive stroke, and I quit my job to go move to, of all places, West Virginia, where she lived, and go see her in the nursing home every day. And then when she died, I rode a Harley that belonged to my biological father, whom I had never met in person. A lot of people don't know this, but I never met my biological father. We talked on the phone 3 times in my life. And his widow happened to live also in West Virginia. So she found out that I was there looking after my grandmother's house and going in and seeing her. And she reached out and she said, "Hey, I would love to give you his Harley. It's just sitting in the garage." So when my grandmother died, I picked up the Harley and I rode that Harley around the country for a little over a year. And it was somewhere, again, big beard, long hair. I had no accountability, no responsibility. It was truly a once in a lifetime opportunity. And I was halfway between Sturgis and Denver. And I thought, with ZZ Top playing in the background, maybe I could raise 25 or 30 million and just basically go and become a financial advisor. And let's see where that kind of goes, because I have this unusual knowledge set of what these different firms out there do, but more importantly, don't do for their clients. So that was the most exciting moment, because it was that realization that really led to where I'm at today. And I'm sorry, your second question, Brittany?
Oh, my second question was, what was the most challenging then? What was the most maybe the most exciting moment of, in the process? And then what was the most challenging in starting it?
Yes, so that's right. And I apologize. The most challenging were the first 2.5 years, because I failed miserably. I went from going and meeting with these investment committees at family offices and talking about delta hedging and theta bleed and yield curve steepener trades and a number of things that are very technical in nature, which I happen to really love because of my background in science. The more technical and nerdy, the better for me, because that's just how my brain works. What I realized is that the typical client does not care about how the portfolio is constructed unless they're an engineer or certain types of attorneys. They generally just have no interest. They really want to understand the warmer and fuzzier elements of the planning relationship. And it took me a lot of fumbling the first 2.5 years. And then finally, it just kind of clicked, because when I got into my former career, I had several mentors that were teaching me how to have the conversation with financial advisors and with investment committees. But when I became a financial advisor, I did not have that. And it really took a lot of dropping the ball, to use these sports analogies, to learn from my own experience to then correct that. And once it really started to work, it all just worked, and it's been great.
That's amazing. That's amazing. I do feel, what we're most afraid of, freedom is on the other side of fear, so we should always go for what we're most afraid of. You'll have to excuse me if you hear a little squeaking sound. My dog has decided that he wants to play. So if you hear a little toy,
this is fantastic. It's fantastic. In the post-COVID world, I hope that the largest takeaway is the vital importance that we are human again.
Yes.
Depending on where you live in the country, many of us were indoors for the better part of 2 years. That has a social impact. That has a psychological impact. So I love the fact that your dog is there and enjoying life and chewing on the chew toy that's making noise, because that's what it means to be human. That's great, right? Like, it's all part of life. If we had this about a year ago, one or both of my kids would have come into my office here and, "Hi, Dada, hi," because that's how kids are. And like, life is meant to be lived.
Yes. Well, I feel very lucky that I get to be able to spend so much time with my dog, so he doesn't realize how spoiled he is. I will say that. He has no idea, but yeah, he's my whole world. They're the best, so I wanted to ask some questions about what your tips would be for people who are just maybe entering this space and trying to understand the world of alts. what would you suggest are the best resources to learn?
So about 4 years ago, I wrote a piece for Think Advisor that was titled, and bear with me momentarily because I want to make sure I quote this correctly, 10 due diligence questions to ask absolute return managers. So you can simply Google that, Vance Barse, 10 due diligence questions, and it will pop right up. It's really important that financial advisors understand the following. Number one, does the client need alternative investments based on their risk tolerance and investment objective? And number two, what are we trying to achieve? Because if the client is of the mindset that they want to hedge out downside risk, should equity markets go through a maelstrom, then crisis alpha strategies like managed futures might make sense. If the client simply is trying to smooth out the overall return stream and wants some upside of equity markets, but also wants to hedge out some downside, then maybe a long short equity or merger arbitrage strategy might come to mind. But there are articles out there that really simplify the inherent complexities of alternative investments. And interestingly, I've found that particularly those clients who have assets, and where are most of those assets with respect to age in this country? They're folks that are baby boomers. They have an interest in capital preservation. So it's important that financial advisors at least have a working knowledge of the landscape so that they can fluently engage in conversation around alternatives and then pick the best strategy or strategies, as the case may be, based on the client's objectives.
Are there any podcasts or books that you would recommend that you've read yourself or consume yourself?
Yes. So there are too many books to go into now. I know that Corey Hoffstein has done podcasts on alternative investing, which I've really enjoyed. And there are several others. Do you happen to have a podcast yet that covers some of the fundamentals, Brittany?
Well, this podcast here, we're covering, alts and just breaking down. And that's what we're doing every week, is just inviting different people on and, just discussing their journey to alts and, what it's been like for them, their recommendations and everything. So that's, the foundation of this really is just bringing up, and creating a discussion around it. But, this is episode 4. And so, of course, if there's anything that you think we should cover or bring on here, please, I am absolutely open to all recommendations. We want this to be a safe learning space for everyone. That's why I was saying earlier, I'm really curious to know what your journey, I'm always curious to know what the journey is to arrive into the finance industry, because it's different for all of us. And just, again, how important it is, our behavioral, our emotional relationship to money in general really creates that foundation and dictates so much of our life. So
yeah, so you can't see it now, but I have an entire library of alternative investment books off to my right here, your left. And I'm certainly happy to answer any questions that viewers might have on where to start. There are some asset managers like Altegris and AQR that if you go to their website and you just do a little clicking around, there's some, foundational white papers and so forth that can really get folks introduced to this space. It's also important for financial advisors that might have institutional clients, maybe some endowments that have long-term horizons that really fundamentally, per the IPS or investment policy statement, would require the inclusion of alternative investments at a, say, 10 to 35% allocation. So plenty to think about and more to discuss.
For sure, for certain. I got a certification from Kaya on the fundamentals of alternatives. That was really helpful for sure to get a jump start on it. But it's such a vast world. There's so much to learn. And I think, that actually just never ends as we continue to evolve and grow in this space. What are some of your favorite alts right now, funds and things that you perhaps would recommend right now? Should we be watching, paying attention to? What do you feel?
A couple come to mind. The first of which is merger arbitrage. And due to compliance reasons, and I hope that every financial advisor out there is laughing at that because you understand the struggle. I can't mention individual names, but I like to look at manager tenure and certain correlations of the strategy relative to S&P 500, other alts, and also fixed income. I think a lot of advisors look at the correlation of alternative investments to the S&P, but if we're going to provide a menu of alternative investment options for clients, I really want to look at the degree to which different alternative investment strategies have had hopefully near zero correlation in the past, because you would want to diversify the diversifiers, if you will. But in particular, merger arbitrage comes to mind. And for clients that are skittish on the equity valuations, and we don't have many of those because most of our clients have been through major cycles. They've been through the crises, that you hear about. 1987, I mentioned them earlier, but the dot-com, the Great Recession, and so forth. And they just go, hey, Vance, it's not time in the market. It is time in the market, as retail as that sounds. But for those that are skittish, we do look at managed futures as another point of intrigue in this environment.
Fantastic. All right. Well, is there anything else you would like to share or any final thoughts you'd like to leave with our audience?
Just remember the fundamental importance of being authentic and putting it out there, because clients see it, they resonate with it. Even if someone might not like the same music that you do, or that you go fishing in Maine or something like that, they love the authenticity factor, because it's one thing to have the technical expertise and know-how in bringing value to clients, but it's also another thing to really be human and have that level of trust with clients. So really appreciated you having me on here. Thank you so much, Brittany. It's been fun.
Thank you so much. That was beautiful. So well said, Vance. Thank you so much. You really are the best. It's been so great chatting with you today. Thank you again for taking the time. And everyone, go ahead and give Vance a follow and Banrion Capital a follow on LinkedIn, Instagram, and Twitter X. So we will see you next time on episode 5. Thank you so much for tuning in, everyone. We'll see you next time right here on the Green Couch.
The opinions expressed in this program are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or any specific security. It is only intended to provide education about the financial industry. To determine which investments may be appropriate for you, consult your financial advisor prior to investing. Any past performance discussed during this program is no guarantee of future results. Any indices referenced for comparisons are unmanaged and cannot be invested into directly. As always, please remember, investing involves risk and possible loss of capital. Please seek advice from a licensed professional.